Hello dear students, myself CMA Padmaja Buzruk. I will be continuing with the topic debentures. We have seen sources of redemption of debentures. Redemption can be either out of capital or out of profit, or conversion or rollover. We'll be seeing illustrative examples for redemption of debentures having conversion and rollover. Illustration of redemption of debentures. Illustration 38. On April 1st, 2011, PT Limited issued 25 lakh 12% fully convertible debentures of 100 each at par. 25 lakh debentures were issued. Face value is 100, issued at par. Fully convertible debentures. The debenture holders were given the call option to convert the debentures into 10 equity shares at a premium of rupees 40 per share on or after July 1st, 2015. So these debentures can get converted into equity shares. Face value is 10 at a premium of 40. So 10 plus 40 issue price will be 50. On 1st April 16, the debenture holders holding 10 lakh debentures exercised their option. So 25 lakhs was issued and 10 lakh debenture holders exercised the option, that is, you are supposed to carry out redemption for 10 lakh debentures. Pass necessary journal entries. Rupees are in lakhs. See here, it is always better to write these rupees either in lakhs or in thousands for easy calculations. Otherwise, figures will be too lengthy. Rupees are in lakhs. So, what are you supposed to do? 25 lakhs is the issued debentures. So what you will do, rupees are in lakhs, therefore number of debentures issued will be 25 divided by 1 lakh. Number of debentures issued 25, and this also we'll find out now. 10 lakh will divided by 1 lakh. Number of debentures to be redeemed, 10 lakh divided by 1 lakh is 10. Debenture amount to be redeemed. Debentures are to be redeemed at par. Each debenture will get 100 rupees. So 10 debentures will get 10 into 100, which is equal to 1000 rupees. But they are not getting the cash back. They are getting these debentures converted into equity shares. What is the issue price of equity shares? 10 is the face value plus 40 rupees premium. 10 plus 40 is 50. So issue price is 10 plus 40, 50. To be amount to be redeemed is 1000. Total amount to be redeemed is 1000. And price per equity share is 50. So number of equity shares will be 1000 divided by 50, which is equal to 20. Now we'll see the journal entries. As on 1st April 11, this is the entry for issue of debentures. Bank account debit to 12% convertible debentures account 25 into 100. Now at the time of redemption, this entry will be passed. 1st April 16, 12% convertible debentures account debit 1000 to debenture holders 1000. This will be the first entry, and second entry will be debenture holders account debit 1000 to equity share capital account 200 to securities premium account 800. 20 equity shares into 10 will go to equity share capital 200. 20 equity shares into 40, 800 will go to securities premium account. They have passed combined entry. 12% convertible debentures to equity share capital to securities premium, but it is always better to pass two entries. 12% convertible debentures account debit 1000 to debenture holders account or debenture redemption account 1000. This is the first entry, and second entry will be debenture redemption or debenture holders account debit to equity share capital to securities premium account. Now we'll go to next illustration. Illustration 39. Beta Limited had issued 11% 5 lakh debentures of 100 each, redeemable on 31st March 15 at a premium of 5%. Number of debentures issued 5 lakh at 100 and it is redeemable at a premium of 5%. So each debenture is getting 100 plus 5. Each debenture holder will get 100 plus 5 on each debenture. The company offered three options to debenture holder as under 13% preference shares at rupees 10.50. Here debentures will get converted into preference shares as per first option. 14% debentures of 100 each at par. Here debentures will get converted as debentures only. 11% will get converted into 14% debentures. This is rollover. Redemption in cash. Debenture holders will get cash payment. The option were exercised or accepted as under option 1 by holder of 1 lakh debentures, this particular option. Option 2 by holder of 1 lakh debentures, that is second option, 14% debentures. Option 3rd by holder of 3 lakh debentures. Third option, cash payment. The company carried out the redemption past necessary journal entries. 1 lakh debenture holders opted for first option. 1 lakh debenture holders opted for second option. 3 lakh debenture holders opted for third option. 1 lakh plus 1 lakh plus 3 lakh, 5 lakhs. This is how these 5 lakhs debentures were redeemed. Now each debenture will get 100 plus 5, 105. Whatever may be the option, first entry will be at the time of redemption 11% debentures account debit, premium on redemption of debentures account debit to debenture holders. Now here it will be debenture holders to preference share capital to securities premium. Second option, debenture holders to 14% debentures. Third option, debenture holders to cash or bank. Now we'll see how it is to be solved. Rupees are in lakhs again. Therefore, number of debentures issued 5 lakh divided by 1 lakh, which is equal to 5. Option 1 and second accepted by 1 lakh debenture holders. So we'll here assume that one debenture holder amount due to them is 100 plus 5, 105. Face value, it is redeemable at 5% premium, 100 plus 5. This is option first and second. Option third is accepted by 3 lakh debenture holders, that is 3. We are converting here, we are dividing it by 1 lakh. Amount due to them will be 105 into 3, which is equal to 315. Now first we'll see journal entry. 11% debentures account debit 500 rupees are in lakhs. Premium on redemption of debentures account debit 25 to debenture holders account 525. Debenture holders will be getting back 500 as capital and 5% of capital. 500 into 5%. 5% of 500 is how much? 25. So 500 plus 25, total 525 is due to debenture holders. First option, debenture holders account debit 105. First option, debenture holders account debit 105 to preference share capital 100 to securities premium 5. See here, number of 13% preference shares in option 1. We'll calculate number of shares. Amount due to debenture holders is 105 and what is the issue price? 10 rupees 50 paisa. So 105 divided by 10.5, number of 13% preference shares is 10. So preference share capital will be 10 into 10, 100 and securities premium will be 10 into 50 paisa, which is equal to 5 rupees. So debenture holders account debit 105 to 13% preference share capital 100 to securities premium account 5. This is first option. Second option, debenture holders account debit 105 to 14% debentures 105. This is rollover of debentures. 11% debentures are getting converted as 14% debentures at par. Third option, debenture holders account debit 315 to bank 315. As per third option, cash will be paid to debenture holders, so debenture holders to bank 315. If you add this 3, 105 plus 105 plus 315, you are debiting here to debenture holders. If you add this, it will add up to 525, which we have credited to debenture holders as per our first entry. Now we'll go to next illustration, illustration 52. On 1st Jan 2015, Cargo Limited issued 2000 10% debentures of 250 each at 225 each. 250 face value. They are issuing it at 225. Issue at lesser than face value. Issue at discount. Debenture holders were given an option to get their debentures converted into equity shares of 50 each at a premium of 25 per share. Equity share 50 is the face value, 25 is the premium. So issue price will be 50 plus 25, which is equal to 75. So option is these debentures can get converted into equity shares of rupees 50 each, but issue price is 75. On 31st December 15, 1 year's interest had accrued on these debentures which was not paid. Debentures were issued on 1st Jan 15. On 31st December 15, 1 year's interest is accrued on them which was not paid. So you are supposed to pass outstanding interest on debenture journal entry. A holder of 200 debentures informed that he wanted to exercise the option for conversion of debentures into equity shares. 2000 debentures issued. Out of that, a holder of 200 debentures wanted to get his debentures converted into equity shares. The company therefore accepted his request and redeemed these 200 debentures by issuing him equity shares. So, company has issued him equity shares and his debentures were converted into equity shares. The interest, however, on these 200 debentures was paid to the debenture holder. Interest, 1 year's interest was outstanding, but only after conversion these 200 debentures interest was paid. Remaining is still outstanding. Pass necessary journal entries. On 1/1/15, issue of debentures entry, bank account debit 2000 into 225, 4,50,000. Discount on issue of debentures account debit 2000 into 25, 50,000 to 10% debentures account 2000 into 250, 5 lakhs. Debentures will be credited with face value even if they are issued at par, premium or discount. On 31st December 15, outstanding interest on these debentures. Interest is always to be calculated on face value on 5 lakh. Interest is 10%. Why 10%? 10% debenture. That means interest is at 10%. 10% of 5 lakhs is 50,000. It is outstanding. So we are supposed to pass journal entry on 31st December. Interest on debenture account debit 50,000, which is 10% of 5 lakhs, to outstanding interest on debentures 50,000. Now, the debenture holder having 200 debenture got his debentures converted into shares. So 10% debentures account debit 200 into 250, 50,000. To discount on issue of debentures account 200 into 25, 5,000. To debenture holders account 200 into 225, 45,000. Debentures were issued at discount. Discount is 25. So whenever you are redeeming the debentures, they will not be getting the entire 250. Why? Because this is conversion. They are not getting paid cash, conversion into shares. Now if here instead of crediting discount, if you pass journal entry 10% debenture to debenture holders and debenture holders to capital and premium, that means you are transferring 50,000 to debenture holders, and if this 50,000 is getting converted into share capital, the meaning of this is company is issuing shares at discount, which is not allowed. as per Companies Act 2013. So company has collected 45,000 from these 200 debenture holders. So only this 45,000 will get converted into shares. So debenture holders account debit 45,000, to equity share capital account 30,000, to securities premium account 15,000. We'll calculate number of shares, number of equity shares, amount due to debenture holders 45,000. What is the issue price of each equity share? 50 plus 25, which is equal to 75. Number of shares are 600. The equity share capital 600 into 50. Securities premium 600 into 25. That is how this entry is to be passed. Outstanding debenture interest account debit to bank, it is not 50,000, it is only 5,000. Why? Because interest was paid only to these 200 debenture holders whose debentures were converted into shares. So this entire 50,000 has not been paid. Only this interest on 200 debentures was paid. So this amount is not 50,000, but this amount is 5,000, 10% of 50,000. On this 50,000 interest was paid. Now we'll go to next illustration. On 1115, Hudco Limited issued 1015% convertible debentures of 200 each at a discount of 5%. Debentures were issued at a discount. Discount rate is 5%. Number of debentures issued 1000. Face value 200. Discount 5%. Redeemable at par after 4 years by converting their holding into equity shares of 100 each at a premium of 25%. So it is getting converted into equity shares whose face value is 100, but it is getting converted at premium. So issue price will be 100 plus 25% of 100. 100 plus 25, issue price will be 125. As per terms of issue, the holder of this debenture also have an option to convert their holdings as aforesaid at any time after 6 months but within 3 years. On 31st December 15, a holder of 250 debentures notified his intention to exercise the option. 1000 debentures were issued on 1115, and on 31st December 15, debenture holder who was having 250 debentures exercised this option, that is his 250 debentures were converted into equity shares. Give journal entries on 1115, that is issue of debentures, as on 31st December 15, that is when this conversion took place, and on 31st December 16, ignoring interest. Prepare balance sheet as on 31st December 16, showing related items only. You cannot prepare full balance sheet. Whatever items we know, that only we can show in the balance sheet. So that is why it is given as related items. Now first we'll see how the entry for issue of debentures is to be passed. Bank account debit 1000 into 190. Why? Because discount is 5%. And what is face value? 200. 200 into 5% of 200 is 10. 200 minus 10 is 190. So per debenture they have received 190. 1000 into 190, 1,90,000. Discount on issue of debentures 1000 into 10. Just now we have seen debenture is discount is 10 rupees, 10,000. To 15% debentures account 2 lakhs. Whether debentures are issued at par, premium or discount, face value is to be credited to debentures account. Now 250 debenture holders exercise the option of getting it converted into shares. 15% debentures account debit 250 into 200, 50,000. To discount on issue of debentures 250 into 10. 10 is discount per debenture 2,500. You can split this entry like 15% debentures account debit 50,000, to discount on issue of debentures account 2,500, to debenture holders account. Debenture holders account will be 50,000 minus 2,500, which is equal to 47,500. And one more entry you can pass, debenture holders account debit 47,500, to equity share capital account 38,000, and to securities premium account 9,500. So this entry can be split as 15% debentures account debit 50,000, to discount on issue of debentures account 2,500, to debenture holders 47,500. Difference between these two. And second entry, debenture holders account debit 47,500, to equity share capital 38,000, to securities premium account 9,500. Now we'll see how this 38,000 and 9,500 has come. See the working note. Nominal or normal value of debentures to be converted 250 into 200 is 50,000. Reversal of discount 2,500. Amount actually received on these 250 debentures is 47,500. Issue price of equity shares is 100 plus 25, which is 125. The number of shares to be issued is 47,500 divided by 125. 47,500 divided by 125, which is equal to 380 number of shares issued. So that is the reason why this is 38,000, this is 9,500. 380 into 100 and 380 into 25. Now extract of balance sheet, equity shares of 100 each fully paid 38,000. 38,000 equity share capital, assuming that there was no equity capital in the balance sheet earlier. So this is the whatever has been converted, only you will find here. Non-current liabilities 750, 15% debentures of 200 each, 1,50,000. Why? Issued debentures 1,000, out of that 250 redeemed, so remaining are 750. Now how this 1,000 has come, how this 2,000 has come under reserves and surplus, that I will explain. Discount on issue of debentures account debit 10,000, discount on issue of debentures account credit 2,500. Net effect is 10,000 minus 2,500 will be the net effect. 10,000 minus 2,500, 7,500 debit. And if you see securities premium account 9,500 credit, so net debit is 7,500, securities premium account credit is 9,500. So credit is more by 2,000. Reserves and surplus account 2,000. See here note, securities premium 9,500 minus discount on issue of debentures 7,500. Therefore balance 2,000. It has been assumed that no portion of discount on issue of debentures has yet been written off. You have to be very careful while calculating the number of shares issued. Then and then only your journal entry will be correct. Correct amount will get transferred to capital as well as premium. This amount was actually due to debenture holders, and these is getting converted into equity shares, and equity shares at premium. So this is your issue price and these are number of equity shares. Thank you.